Hi, my name is Jeff McNaughton, the Director of the Saskatchewan School Boards Association General Insurance Plan.
And I am Ihenyen, the Insurance Administrator.
While we have different roles and responsibilities within this plan, we both work closely with our broker Marsh to offer and administer the property and casualty or P&C insurance coverage for member school boards. I think it's fair to say that the history and the current state of this plan can be complex and technical. And this presentation is designed to provide a bit of the history and the general operations of the plan. Our hope is that it will help you understand better how the program works and serves our members. School divisions in Saskatchewan have always had some sort of insurance coverage for their identified risks. But as the education sector evolved and grew, the challenge to insure all school divisions grew increasingly complex, and coverages were not uniform and premiums were growing. The question became, what can we do about it? It started with shared risk and shared cost, and this was the basis for a group insurance plan. In 1986, the SSTA, now the SSBA, created our own property and casualty insurance plan through Aon in order to achieve some uniformity and to manage premiums. Then in 1996, the General Insurance Plan hired Marsh as its broker, a relationship which remains in place today. This plan is voluntary and we have 100% participation from school divisions in the province. The complexity of the plan has continued to increase over time, but so have the opportunities to develop a comprehensive, uniform insurance plan that identifies and manages the insurance risks and thereby maintains premium cost efficiencies for everyone. How is this accomplished? The SSBA General Insurance Plan is an example of a shared purchase model in which, as a whole, the association negotiates preferred rates with insurers. As a group, the insurance plan spreads risk throughout the education sector, thereby reducing the premium per participant. A total property value covered under this program is over $9.5 billion. Total premiums collected were $7.5 million, which represented a reduction of about 7.7% from the previous year.
The SSBA General Insurance Plan has 13 lines of coverage designed to uniquely serve the education sector. Details of the coverage is available in the handout provided and includes property insurance, boiler and machinery insurance, general liability, errors and omissions liability, sexual molestation and abuse liability, auto and garage, industrial art shop garage auto, non-owned aircraft liability and aviation general liability, international general liability, air quality loss pool, crime, trustee accident, and student accident coverage. In some cases, policies coordinate in order to provide full coverage on an incident. An example of this is for school personnel transporting students. In this case, the coverage provided is through a combination of general liability, non-owned automobile liability, the volunteer excess liability insurance. In addition, there are several risk mitigation strategies that can be undertaken, including requiring all staff and volunteers who transport students to have a third-party liability of $2 million on their car insurance, for example.
There is an annual renewal process for the plan, which completes on January 31st of each year. SSBA and Marsh meet with our current and prospective insurers annually to talk about the environment of education in this province and insured risks. There is an opportunity to meet our insurance partners face-to-face and have comprehensive discussions. These meetings and our claims history are the basis for the premium renewal offers. At times, we meet with prospective insurers as well, who are looking to obtain our business in the future.
The SSBA and Marsh share administration of the plan, and therefore admin fees are minimized. Ongoing continuous improvement of the general insurance plan processes results in finding cost efficiencies. For an example, in 2017, the admin fees were reduced by $200,000 over the previous year. Beginning with 2018 renewal, the SSBA admin fee premium payable shows a separate line on each invoice as a measure of increased transparency.
Having self-funded loss pools are a premium reduction strategy whereby the SSBA General Insurance Plan assumes the first layer of risk and the insurance companies assume the upper layer of risk, which helps keep our premium lower. The loss pools act as a group deductible that lowers the insurer's risk exposure. It should be noted that our insurance underwriters have some input into what our annual aggregate loss in the loss pool is, and there is a limit to how much our loss pools can impact our premium. A regular cycle of valuation and financial analysis of our loss pools ensure they are properly funded for the risks they are covering, which can be difficult for infrequent but high-cost claims.
The SSBA has 4 loss pools in the program. the Sexual Molestation and Abuse Liability Loss Pool. Liability for claims that occurred after 1996 never closes, and the premium calculation for this pool is $1 per student. The Property Loss Pool. The limitation period is 2 years past occurrence of loss, and the premium calculation for this pool is based on property value. The Air Quality Loss Pool. Claims can be made retroactive to the inception of the pool, and the premium calculation for this pool is $1 per student. The General Liability Loss Pool. The limitation period lasts until 2 years past age of majority to age 20 for a claimant. So if a student in kindergarten is injured, school division liability lasts for 15 years, and the premium calculation for this pool is a formula based on student count. Of the $7.5 million in premiums collected from school divisions in 2016, $3.35 million went into these pools. Once these pools have paid out their maximums, any further claims get paid by our insurers, except for the air quality, which is not insured anywhere else in our program.
This is how the loss pools operate. Premiums are collected from the school division and taken into each of the 4 loss pools. Claim expenses are paid out of the loss pool to the upper occurrence and the annual aggregate maximums. There is never a deficit on a loss pool. On any given year, it can be drained or it can be in surplus only. The surplus grows as outlined here over time. Funds are valued and analyzed every 5 years, and based on these reports, the SSBA executive manages the fund. Disposition of surplus is directed through the executive through policy and through trust agreements.
Each loss pool requires a specific minimum amount of money to pay its expected liabilities, and so has a restricted fund. Any fund in excess of that would be considered unrestricted. As per Executive Policy Number 15 and the 1997 Trust Agreement, the executive is responsible to manage the loss pool fund, maintain an appropriate level of funded status, and manage insurance and emerging risk through development and closure of loss pools. All decisions regarding funds are to be made by the SSBA executive as per the above noted policies.
Current reporting is to the executive and through to the member boards of the plan. The loss pool funds are reported in the annual report through the audited financial statements. Actuarial reports and funding analysis of the loss pools are conducted every 5 years with reports to the executive. Looking forward, based on the 2016 AGM resolution, enhanced reporting on the loss pool claims and trend activity will be supplied to the members of the General Insurance Plan. Well, that covers a basic overview of the plan, the administration, the coverage, the loss pools, and the reporting. The Saskatchewan School Boards Association is proud to offer member boards the most competitive group insurance coverage. Your program is unique to the education sector, and it leverages the strength of the number of boards participating.
If you'd like more information or have any questions, please do not hesitate to contact us. We are here to serve you.